Hello, Emin. Welcome to the 100X show.
Thank you very much for having me.
So we have already done the deep dive on Avalanche. We have done a video. We also did a report. So instead of just getting to your background, I would like to just go directly into the weeds of the architecture of AVAX. So can you just give us a high-level understanding of the architecture of the blockchain, focusing on C chain, P chain, as well as the X chain?
Absolutely. I'd be thrilled to do this. And thank you so much for saving me the trouble of describing my background, how I got into crypto, and all the standard questions, which I don't mind discussing, but it's nice to talk to a technical audience that wants to just dive deep into the details. So let's do that immediately. Avalanche is a next generation blockchain platform. It differs from everything else that came before it. And there are a couple of things that differentiate it. It is based on a new consensus protocol that works entirely differently than everybody else that came before it. All of the systems that came before us either rely on mining, which is a environmentally destructive, terrible consumption of energy to produce tokens and to produce a blockchain, or they rely on a consensus mechanism that requires all-to-all communication. They require signatures from all the participants, and therefore they have inherent limits to how many people can participate in a round of decisions. Avalanche is different. It uses a different mechanism that probabilistically ensures that everybody is in agreement without everyone having to hear from everyone else. So all the other protocols, they have what we call signature accrual, and for me to pass a block, for me to accept a block, I need to see signatures, kind of like, in a Senate, to pass a law, I need to see signatures from, a majority, a supermajority of the participants, of the senators in my Senate. So that's how everybody else works. Everybody checks to make sure that they receive the 67 signatures. In Avalanche, we do something different. What the protocol does at the network level is everybody checks with their friends, who check with their friends, who check with their friends repeatedly, and in so many times that by the end, you have high assurance that everyone is in agreement, even though you did not personally check with them yourself. You relied on other people to do it for you in a transitive fashion.
Is that the reason why we have the term avalanche?
Absolutely. So it starts out slow. It starts out with perhaps a slight preponderance towards passing one law to another, and builds up. And very quickly, you end up having a critical mass behind the law, and then it becomes immutable in the chain. So that's the one of the big breakthroughs in Avalanche. That is, it has a consensus protocol that is much faster because it has a different mechanism of action. The second big thing that's different is that it has a different network structure. So other chains are monolithic. They are one size fits all. They have one coin, one virtual machine, one network. There is Bitcoin, the Bitcoin virtual machine, and the Bitcoin network, or Ethereum or Ether, the EVM, and then the Ethereum network. In Avalanche, we have AVAX the coin, we have the Avalanche virtual machine, and we have the default network. But we also have the ability to create additional coins, additional virtual machines, and additional networks. We call these things subnets. So anyone can create a blockchain with their own rules, their own virtual machines, backed by the nodes that they have admitted into their system. So you and I can generate easily, for example, a blockchain that's specialized for IoT, a blockchain that's specialized for decentralized exchanges, a blockchain that's designed for, let's say, upholding American laws, a blockchain that's designed for Europe that upholds the GDPR requirements, and so on. So compliant assets are very easy to produce under such a system, and it's also very easy to produce blockchains that are distinct and separate and failure isolated from each other. So if you create a subnet, the fees on it are things that you determine. You're not affected by somebody else minting NFTs that day. And failures of these subnets are also independent from each other. So these two things render us very, very different from everybody else that came before us. So those are the two big things. I'm very happy to delve in. There are a couple of default networks. There is an X chain, a P chain, and a C chain. There's a platform chain that coordinates everything. That's where you create other subnets. That's where you do your staking. That's how everybody knows who's in which subnet and how many subnets exist. There is an X chain that's designed for payments. It's super fast. It does only payments. It's very limited in nature. You can't do too many exciting things with it. Everything you can do with Bitcoin, that's what you get to do on the X chain, but nothing more than Bitcoin. And then there's a contract chain, which is running the Ethereum virtual machine, and it allows you to do everything that Ethereum can do. So there you can install smart contracts, and we have 500 more plus dApps today, and many more are coming on every day. We have about $11 billion of value locked on that chain, and there's a very vibrant DeFi and NFT scene happening on it. So that's sort of the lay of the land in Avalanche, at a very high level.
So I just want to dig deeper. I know the unique addresses are increasing exponentially. We are sitting at all-time highs when it comes to contracts deployed, unique addresses, and so on and so forth. So, for example, with the C chain, you see a lot of composability. It's optimized for DeFi. But hypothetically, let's say in a couple of years' time, let's say there are a lot of applications being built in. There's a lot of TVL. If that chain gets congested for some reason, will we see another type of a C chain, or okay? So we can have another C chain if
absolutely.
That chain.
You're going to see that sooner than you think. There are already people deploying their own EVM on their own subnets. So you can imagine having an EVM that's mostly for NFTs. I suspect this will happen before anything else. The NFT issuances, they put a lot of strain, and they shouldn't interfere with DeFi. And DeFi and NFTs don't really mix all that well. So moving NFTs off into their own chain would be a big boost, and it would reduce the fees for both. Both NFTs and DeFi would pay less if we had two chains dedicated to those two uses. And we're going to see other people deploy their own dedicated networks, Ethereum-like networks for their own uses. We will also see DEXs deploy their own chains. So we have a couple of DEXs already working on building their own subnets because, DEXs require frequent interaction and the fees have to be very, very low. So these DEXs will end up having their own validator structure and will have their own fee model.
And am I correct in kind of assuming that the X chain will then perhaps kind of take shape where, let's say, the chains have to communicate with each other in terms of interoperability? So will the X chain also kind of jump in terms of helping in the transfer of tokens between
Absolutely.
subnets?
Exactly that. Exactly right. So the X chain is very cheap to use. It's very high capacity, and it's there to facilitate payments and transfers. And I expect it to continue. It's got the Avalanche virtual machine as opposed to the Ethereum virtual machine. I designed the Avalanche virtual machine. I'm partial to it. I really like the design. It's a secure system, unlike the EVM. EVM is very hard to secure. It's not designed very well. But the AVM, I expect it to be there for people who just want to do payments and transfers.
So just to summarize, can I summarize it like this? So with Avalanche, like in terms of the network, you kind of get like a sort of like Polkadot, Cosmos. You also get Ethereum, and you kind of also get something similar to, let's say, Nano, Phantom, where you have faster payment transfer. So is it correct to kind of conclude or summarize that we get the benefit of each of these different chains all in one?
Absolutely, exactly like that. It's like a big umbrella under which people can create multiple chains. It's similar to Polkadot and Cosmos's zones and parachains in the sense that you can have these separate things. But the virtual machines that run in each and every one of these subnets can be drastically different. They can do anything you want, and it's a fairly it's an incredibly flexible system. One other thing I should mention is that we give people control over their own chains and over their own networks. So we give you some ability to control those in a way that Ethereum does not. So that's a very nice situation to be in.
Yeah, so let's just discuss that. I know with Subnets, we can potentially have access to a $1 trillion theme, which is, in my opinion, security tokens, and enterprise solution. And I know there have been different new financial primitives within Avalanche as well. Like we had ILO, we also had like a participle, like the NFT fractionalization of real art. So let's just like, can you shed some light on this? Like, how
Yeah.
are we thinking about this in terms of growing the pie?
Right. So here's my vision for what's going on in blockchains, and I think that's where we should start from and sort of look down. So at a very high level, what we have is a $1 trillion market. So Bitcoin is 700 billion of it. Ethereum is about, 200 something. And then the rest is like, the smaller chains. And we are, I would say, even though we're a top 10 system, I think we are far smaller than our capability. What we're going to find out, or what we also know already, is that there is a tremendous number of valuable assets out there. There's about $700 trillion worth of assets in the world. And those assets are itching to go on the blockchain. They're absolutely dying to go onto blockchains in some form or another. But to do that, they need some kind of infrastructure support. Often the people who are in charge of these assets, the ones who have them on their balance sheets, they are limited by legal considerations, by compliance considerations, or the systems underneath are just not flexible enough. With subnets, we can create specialized chains for each and every need and requirement. We can accommodate whatever constraint these people might have. And so suddenly you will find that institutions and enterprises, which have very valuable assets, that currently cannot put them on a chain, because when they go to their legal department, the legal department says, well, what happens when XYZ? And there's no answer, right? So because the answers are unknown. Once the assets are in chain form, you lose control over them. If they're on your subnet, then you could actually control the disposition of the asset throughout its entire life cycle. So we will find that enterprises and institutions are digitizing these assets, and the pie is going to grow immensely. And none of these chains are going to kill each other, by the way. The chains that exist, they're here to stay. Even dead chains that are technically dead, they don't die and go away. So what we will find is that this area will grow. It will grow tremendously. And as it grows, the chains that succeed are going to be the ones that can absorb that growth. So I'm really excited about all that. And I think Avalanche is poised incredibly well. Unlike some of the other new chains, we are not monolithic. We support multitude of different use cases underneath. We are very flexible, and we're very fast. We have the fastest consensus protocol ever devised. So that's our current position, and that's how I see the world playing out. Our vision at Avalanche is not to compete with the dollar. It is not to compete with gold or digital gold. It's not to, yes, AVAX is money, but we are not trying to be a store of value. We want this thing to be used, and it's got a lot of exciting uses. We are not trying to be a computer in the sky. We support everything Ethereum does, but we're not trying to compete with that use case. Instead, what we are trying to do is digitize all of the world's assets. That's been our vision from day one, and we built our entire infrastructure to make that happen.
All right. Excellent insight. So can you also shed some light on the enterprise solutions? Like I mentioned ILOs and participles. I think in terms of growing the pie, I think those applications, apart from security tokens, could also be very interesting. So some of the enterprise solution you guys are thinking about or partnering up with?
Sure. Let's see. I think let's start with ILOs. It's a new class of asset that we invented in partnership with a couple of other external firms. It's happening and taking place on top of the Avalanche platform. So what's an ILO? An ILO is an initial litigation offering. Okay, so it's a case where you sell tokens to fund a lawsuit. Any proceeds go to your lawyers. Your lawyers use them only for your legal defense. There's no risk that you, the person, the plaintiff or whatever, will take the money and do an exit scam. So the probability of a rug pull is very, very small. And then when there is a payout, the lawyers are obligated to pay out in accordance with a schedule that you understand. So what's this good for? Well, in the US, justice is very expensive. we would like to think that we have a good and fair justice system, which I think we do, but it's skewed towards people who have deep pockets. And many people who have grievances, who've been wronged somehow, are unable to get their day in court because, the other side uses tactics to bleed them out. So what you can do with an ILO is fundraise and then go to court, have your day in court, and if you win, you pay back the people who backed you. And on the flip side, if you see somebody whose mission or grievance you identify with, you can put your money behind them and say, go for it. Go sue that telephone company to smithereens. You know they've been abusing their users for a long time. Or go sue that bank or whatever it is. Or go sue the state that has wronged you. So I'm really excited about ILOs, and it's a brand new asset class that's built on Avalanche. There are many other cases like this. You also mentioned Particle. So that's an exciting company that is working on the Avalanche system to digitize art, to fractionalize art. So what they've been doing is they've been buying artwork, and the very first one they bought was a Banksy. They bought that picture. I'm not sure if your viewers remember this, but there's a very famous one of a protester with a bouquet in his hand. He's about to, instead of a Molotov cocktail, he's about to throw some flowers at the police. It's a gorgeous picture. So they bought that Banksy. They divided it into 10,000 little pieces, and they're selling those pieces. So you can own a piece of that Banksy. I'm super excited about it. That sale's been going on. It might actually have been concluded by the time this airs, but it's really wonderful. And they'll be doing this with other famous works of art. So you can buy an actual exact piece of a very well-known piece of art. It entitles you to go and visit it at any time you like in whatever museum it happens to be in. And there are a bunch of other rights that come with NFT ownership in this case. It's just a beautiful idea, and it's a great way to crowdfund artwork. I mean, art should be public, and this is a good way for the public to back the artist and the kind of art that it likes. So those are two. There's many more. I mean, we can go on and on. I don't want to just take up all the airtime, but there's like stuff we're doing with Deloitte. There's stuff we're doing with a bunch of Wall Street firms and so on that I'm super excited about.
Excellent. And I know you touched on the token utility of AVAX. You said it's not money. I would love to learn more.
I said it is money. It is money.
It is money. Okay.
It is money, but we're not going after the store of value narrative. We don't want you to just buy it and hold it. This thing is incredibly useful. It's useful for payments, obviously. It's useful for paying fees in the system. It's useful for staking in the system. It's useful for creating subnets and other blockchains underneath the system. So there are so many uses. I would rather people not speculate on it. I would rather them not hold it, because there are people out there who need it, and I'd rather have them take the AVAX. So yes, but it is money. I've used it as money.
Yeah. So one thing I wanted to discuss with you is what are, in your opinion, future or nearby catalysts that will make it very prominent for it to become a deflationary asset? Because at the moment it has both inflation, deflation, and then you have a hard cap. So going towards that trajectory of being a deflationary assets, what do you kind of see in your roadmap, some of the catalysts that will allow AVAX to become deflationary?
So at the moment, so from the get-go, the AVAX token was designed with a hard cap in it. So there will only be 720 million AVAX, no more. Okay, so there is a very, very hard cap. It's just like the 21 million hard cap of Bitcoin. Now, there is a yearly minting rate of approximately 9% or so, and that year, or 9 to 10%. That yearly minting rate is something that's actually going down every year, such that over time we're going to approximate this hard cap. And the core idea here is that these things, these assets, scarcity is a great enabler of value for these assets. So, I should mention the rate at which the minting is done is something that we plan to make subject to governance. So at times, 9% might be too high. At times, it might be too little. The AVAX holders should be able to adjust those rates up and down to make the system competitive against other coins. So let's see, what was the question? The deflationary aspect of AVAX. AVAX was one of the newly created coins. I think it's the only one where coins are burned. Ripple has been doing this for some time, I think. But besides Ripple, a lot of other people were just awarding the coins back to the miners, and there was no real scarcity to the coins. Avalanche, I believe we pioneered of the recent set of coins. We were a pioneer in that we suggested that the coins that are used for fees ought to be burned. So there is constant burn going on every day. Every single AVAX used for transaction in the system is just burned to bring value to the AVAX holders. So the system will reach equilibrium when the AVAX consumed is equal to the AVAX minted on any given day. So we're headed towards that trajectory. The AVAX consumed has been increasing with increased usage of this platform. So I'm thrilled to see that. And there's going to be some equilibrium reached at some point, and we'll see when that happens. And that's when the deflationary nature of the system changes. But, let's also be clear. So in case there are economists listening to me, inflation, deflation, and, these terms, the way they are used in crypto are not the same as the way they are used in economics. And one of the most important things to realize is that inflation is measured in the amount people pay for goods. And if I look at that, which is if I look at the fees people pay over time, then I actually don't see any inflation whatsoever in AVAX. I see deflation, in fact. So people are paying less and less for the same amount of service from the system. So that's a very good situation to be in. And money supply, the rate at which the money supply grows or shrinks is very different from what's really happening with those prices. And if I look at a virtual good that's not changing over time, it's the exact same thing. I send a transaction and I look at how much it costs. And those amounts have been going down over time. And I'm really thrilled to see this. They've been going down in dollar terms over time. So compared to the dollar, in a sense, we have a deflationary environment inside the system already.
So would it be correct to assume with subnets, a lot of assets will be locked, like a lot of AVAX will be locked in subnets, TVL will increase. So that will kind of create like this demand crunch, and you'll have you have slightly deflationary supply, but then you have huge increase in demand. So do you think that could be a catalyst, put it slightly as a price, like for price to appreciate? Do you think that could be a catalyst for enhancing the utility of AVAX? For investors, at least.
Yeah. Thank you for reminding me. I should have mentioned that. So with the growth in subnets that we expect that people will end up having to buy AVAX and stake it. And that's 2,000 AVAX at a time. It's a substantial sum in dollar terms. So when people have to do that, they take AVAX out of circulation. And these subnets require substantial validation. They will all end up having substantial validation requirements. So because they will want to be decentralized. As that happens, AVAX will come out of circulation. That's definitely one of the catalysts for that are going to be in the future. So I'm excited about what's to come there.
So now moving from micro questions, let's just jump into some macro questions. So what are your thoughts on blockchain future being multi-chain? And I know there has been few innovations with Avalanche bridges. Can you just shed some light on that, like your thoughts on the landscape?
Absolutely. So the future is multi-chain, and there is going to be a gazillion different kinds of chains connected to each other by bridges. So some chains are going to be what people call layer 2, in the sense that they're tightly coupled to another chain, and they are sort of symbiotic, maybe parasitic. Most of them are parasitic, and we can discuss that. But some chains will be coupled to each other. Some chains will be independent. Avalanche is its own independent layer 1. So we're not dependent on anybody else for our security. And it's a very cheap and very reliable platform for transacting. People come from Ethereum to us to carry out their trades and go back to Ethereum with regularity. In that new universe, bridges are going to be essential. A lot of these layer 2s, they come with very complicated bridge technologies. Avalanche brought in a fairly complicated bit of technology that's actually very simple from the outside. We are using Intel's SGX trustless computing technology to bridge assets from Ethereum to Avalanche at the moment. We have bridged about $7 billion worth of assets from Ethereum to over to Avalanche. So that technology is pretty interesting and exciting, and it's designed in a way such that even if an insider at Ava Labs with access to the source code was to make modifications, they would not be able to steal the money that's in the bridge. So I'm excited about the security of that bridge. I'm excited about the abilities of that bridge. It's also one of it's the fastest bridge because of the way it's structured, and also the cheapest. So with just a regular transfer operation on Ethereum, you don't have to pay smart contract invocation fees. Just a regular, by sending your Ethereum to an address on the Ethereum chain, it magically appears on the Avalanche side. And then you can use it. And we, in fact, give you a little bit more AVAX as well. And so suddenly you can use that money over on Avalanche. So the future is going to be like this. There's going to be a bunch of bridges. The liquidity will flow among them freely, which it already does, by virtue of these bridges. The bridges will get cheaper and cheaper until they reach some limit. I think we have hit that limit with our bridge technology. I don't think it's possible to make it any cheaper than a single transfer, nor is it possible to make it cheaper to make it faster than the way we've made it. So, and in fact, it's a lot of fun. If you haven't used the bridge, experiment with it. Just send like a little bit of money over, like $10 or whatever. We will give you, if you send more than $50, we'll give you some AVAX. And you can see where the latencies are. You can see the latency of Ethereum versus the latency of Avalanche. So you're going to have to wait about half a minute to a minute on the Ethereum side, and then it's instant on the Avalanche side. So in any case, this is going to be the future. Money will flow to where it's most functional, where it's most needed among all these bridges. We happen to have one of the best bridges, and one of the best systems. So we're really well positioned to take advantage of this new multi-chain universe. And let me add one last thing. Every single person who ever subscribed to maximalism of any kind has been financially wrong and has misled other people. Every single one. So I'm not an Avalanche maximalist myself. If something better comes along, I'll point to it and say they did this and that better than us. But at the moment, I think we have, the best system in terms of the blockchain technology itself, and we have the best bridge technology. We don't have a bunch of the other things that I would like to have. I'd like to have an even bigger ecosystem, an even bigger community. So we're still in the early days. But yeah, we're well positioned for this universe. I'm not a maximalist at all, and I think maximalists have been misleading people and being poor for a long time now. That thesis has been discarded.
Yeah. So on that note, I would like to kind of probe you. Do you think, are there any other chains apart from Avalanche that you feel are also kind of pushing innovation? Maybe some of the other names you would like to mention that you might have picked based on ethos, community, or pushing innovation?
Oh, absolutely. Absolutely. So I love the Ethereum community, and I love Ethereum as a place of experimentation. Ethereum has been unable to evolve their core technology, but that's fine. But the community and the experimentation on top is just amazing, and that's something that we emulate. I happen to love Terra. Terra has built, I think, the largest stablecoin to date, and there's a lot to be said about it. It's an amazing accomplishment. So that's really good. And there are a bunch of other things that I like about many of my competitors. You name one, and I'll name Bitcoin. What's there to not like about Bitcoin? It's like your first kiss. How can you forget the day you read the white paper from Satoshi? I can't forget it. It's like, whoa, that is brilliant, right? It was a brilliant invention 11 years ago. Avalanche is the next big thing that came after it, but it was brilliant. You name it. I have a bunch of good things. Monero, why wouldn't I like Monero? I like Tezos because it appeals to functional programmers. And I could go on like this. You give me even esoteric coins. There's something to like about them. IOTA.
How about Near, and maybe Solana?
Solana is Anatoly is somebody that I have a lot of respect for because he really pushes the boundary of engineering. they don't have the kind of intellectual breakthrough that's embodied in Avalanche. They're using conventional protocols and conventional algorithms, but he's made some engineering design choices that that make his system incredibly fast. I wish they would be a little bit better about communicating their limitations. Their TPS numbers are inflated. I think everybody knows this by now. And the other issue is essentially just generally with measurement things. But or limitations. For example, they have a very hard limit on what you can do in a transaction in Solana. And because of that limit, you don't see DeFi taking off because the kinds of things you want to do don't fit in the size of packets they've got. So there are some limitations there. But overall, I have a lot of respect for the engineering that went into Solana. So I can go on, as I said, like this.
Thank you. Yeah, this is the culture. This is the ethos I love about AVAX, like just being very open and kind of embracing the multi-chain reality, actually, if you kind of see the world around. I also wanted to pick your brain with regards to the persistence dominance of EVM. So we have seen this in operating system. Let's say if we kind of see mobile phones or personal computers, like you have like a 2 or 3 operating system kind of dominating and coming to force. So we might live in a multi-chain world, but do you think there will be like a persistence dominance of Ethereum virtual machine? Or do you think there will be eventually maybe 5-10 years ahead, there will be some other virtual machines, in your opinion, that could start taking over or could become a significant competitor to EVM? And I believe I was listening to some of your podcasts. There's a custom virtual machine being designed at Avalanche as well, I believe.
There are many. So okay. So let me answer your questions in that order. So first of all, in the short term, the EVM is here to stay. There is a lot of essentially preparatory materials, introductory materials that people are exposed to. They've been designed for Solidity, so people are primed to write Solidity programs. There are also companies that know how to audit Solidity. So this is very important. So chains that invented their own languages and runtimes, they are at a great disadvantage. Nobody knows how to audit those contracts. So by tapping into the EVM ecosystem, you immediately end up tapping into a very big network of programmers. Is it really, really big? Not really all that big, but it's still bigger than zero, which is what you would have if you were to invent your own. So the EVM gives you a leg up. It's a reasonable system. There are so many dApps that you can easily have because they've already been written in Solidity. So I'm a huge EVM believer in the short term, in the medium term as well. In the longer term, can we do better than the EVM? Absolutely. Many of the design decisions in the EVM, like JavaScript, are bad. Right? JavaScript is ubiquitous, and every programmer will tell you that JavaScript is a weird language. The EVM, from my perspective, it's been designed without any care or concern for efficient implementation. So that causes, I think, a lot of the difficulties involved in implementing it quickly. It's not very easy to build a fast EVM, and that's why you've got, some of the problems that Ethereum's got. So what will we see? Well, we will see better EVM implementations. The dominant ones right now are fine; they're good. We use them, and we love them, and we have a lot of respect for them. But it's also possible I can see various different tricks, some requiring quite a lot of programming and effort, that can improve it. And so we're involved in doing some of those things, and really excited about that effort. Is it possible to do far, far better? If you were to change the EVM model and start from scratch, I could imagine implementing much better virtual machines that lend themselves to faster execution or better analyzability or any other aspect of that you might want. And so we will see those. And I would say 10 years from now, the situation might change, that people might come up with languages that are much better than Solidity for writing smart contracts, languages that are better analyzable, that compose better, that are, easier to use, etc., that are less likely to cause errors. So we're headed in that direction, but it will be a while because inventing a new language and building a community around it is a difficult one. I'm hoping that that effort will take place on our subnets, because the subnet takes care of all of the hard stuff involved in consensus, and you just need to plug in the interpreter, or the execution engine for the code, for the bytecode. So I'm excited about the future. There's going to be a lot of development, short-term EVM, long-term, who knows? I hope to play a part in shaping that long-term, though.
Excellent. I also wanted to unpack some of the metaverse and DeFi trends in Avalanche. I read the 2021 ecosystem report. I believe derivatives, layer one, structured product, and metaverse would potentially be the future within Avalanche. So maybe kind of shed some light on some of the projects that are building you're excited about, or that have already built, that let's say new user who want to come and play around in Avalanche can experience.
Sure. Let's start with metaverse and NFTs. So today, what people take away immediately are NFT and related ideas from the metaverse idea. So there's a vibrant scene developing on top of Avalanche involving NFTs. So we have a platform called Kalao, Kalao, Kalao. And Kalao is like an OpenSea competitor. It's built from scratch, very different from OpenSea, but it essentially allows you to mint your NFTs and sell them. And it's got a bunch of different things going on at any given moment. And I encourage everybody to take a look at it. There's some great artwork there, and I've certainly participated in a bunch of NFT sales over there. It's been fun. And
they're also incorporating, I think, virtual reality and augmented reality as well to make those galleries interactive there.
Right. So yeah, exactly. Kalao is expanding in the direction of VR, AR. I'm really, really fascinated by what's going to happen there. So these NFTs, they start out, there are two different directions really, Mehdi, that we need to explore. So NFTs are non-fungible tokens. And the technologies that we develop for NFTs are going to be very, very relevant for everything else that's non-fungible. And there are many financial instruments that are non-fungible. One of the main things that I'm really excited about are corporate debt instruments. Every corporate debt is a non-fungible promise, right? It's just so promise from my company versus your company versus, these are all different, right? They're not fungible. So the NFT technologies that we have for pooling and so forth are going to be directly usable for that effort. So that's NFTs will cross over or will develop into DeFi products. That's one. Second, we're going to see NFTs used as credentials. So you're going to have, for example, an NFT that corresponds to something that unlocks the very core engine block of your car, right? Or your refrigerator or whatever else. And this creates a lot of interesting opportunities that are going to be really fascinating to explore. And then the third and final one is the gaming aspect. So there's a lot of games that people are excited about where, they actually invest huge amounts of money, and that investment dies with that game and that game's community. So it would be wonderful to carry that investment over from one game to another if we had different ecosystems. So we are working with gaming companies to create subnets where, ecosystems of games that are compatible with each other have the same assets shared between them. And I'm really, really excited. And this was an unexpected find. When we came up with the subnet idea, this was the last thing on our minds. And it's such a great fit for subnets. So you build a game and I build a game and we share the same swords and whatever else that are compliant between our games. So it's really exciting. I'm really thrilled about what's to come.
I just remember one point, one of the reasons why I believe subnets can actually be very useful for even tokenization of financial assets is because of, let's say, KYC of validator set, and maybe kind of have implementation of anti-airdrop mechanism. If you go on Ethereum, right, if somebody gives you an airdrop from North Korea, you get in regulatory trouble. And I believe, in my opinion, I think subnets could be that puzzle that can allow institution adoption in terms of financialization of assets, which blockchain are brilliant for, I guess.
Absolutely. So you can create walled gardens very easily with subnets. So and that's the kind of thing you need because, as you pointed out, KYC AML requirements for many institutions require knowing your counterparty, knowing that they're not a North Korean agent sending money, etc. So having that kind of structure in place would be fantastic.
So another question I would have for you, like we spoke brilliant things about Avalanche, very bullish myself, but what are some of the risks you see or trade-offs you see for Avalanche in years ahead, which you think could be significant or which you guys are still thinking about that can kind of probe up?
Sure. There are risks with every technology. So coin prices can go up and down. I think I should always say this. I never make price-related, statements. Who knows what will ever happen to this whole space? And I do think it's too big to fail, and it's too big to regulate now in any country. The adoption is high enough that ham-fisted attempts to regulate it they face actual public opposition. So we're in a good spot as an industry, but you never know what's going to happen there. Specifically for Avalanche, the main issues are that it's a newer chain. We're the youngest, and we are trying things that nobody else has tried before. So there is risk associated with that. You could have software errors. I mean, you see this in other chains all the time. Sometimes they have software errors, and that leads to loss. Sometimes they have some fundamental issue, and they're trying to patch around it. Similar things can happen with Avalanche. We don't know how this protocol behaves as well as we understand how proof of work behaves. We've had 11 years with Bitcoin. We understand its behavior fairly well. As an academic at Cornell previously, I contributed to that. I have, I think, the second most cited Bitcoin paper after Satoshi's paper. So we understand that system very well. But Avalanche, we don't. And so there might be dynamics in the system that we don't currently foresee that might require figuring out on the fly, patching on the fly, etc. So that is, I think, my second biggest risk with this system. And then, of course, there's always like failure of the ecosystem, right? So that can happen to any coin. The ecosystem can have, drama, can have also, but we've seen crazy stuff. I've seen a founder, just kind of lose his mind at some point. I'm not going to name the chain, but we've seen that happen. We've seen all sorts of failures happen. So I'm really excited about the team that we have at Ava Labs. We're just one component of the bigger Avalanche ecosystem, but as some of the leaders in the ecosystem, I think we have a special position a little bit, and I'm really happy about the team I have assembled. It's just essentially a whole bunch of people who are professionals who've been. Some of them are crypto native pros, some of them are TradFi native pros. So our execution risk is minimized, and we've been executing fairly well. And most importantly, our ecosystem has been fairly drama-free. So and I should mention this, Mehdi. So everybody else talks about TPS, transactions per second. So we have very high TPS. But one of the second things that I'm really proud of is we have very low DPS, very low dramas per second. And I'd like to keep it that way. So I'm happy about that.
Yeah, we also saw that during the volatility in the market, the chain did really well in terms of holding up. There were occasions where the fees went up, but that's fine as long as people could liquidate some of their positions. Yeah. So, Emin, before we conclude, are there any last thoughts that you would like to share? And maybe you can also kind of pitch Avalanche Summit to some of the audience that are listening to us.
I think this was a great discussion. I don't have anything else that I should mention. I'm really excited about where we are. Random thoughts about the space in general are that, we have what we call a crab market. It's not a direct bull. It's not a real bear. It's definitely not a bear. So it's kind of sideways, goes up and down. And so one suggestion for traders out there is to remember that the traders that have been around for a long time, the OGs, I've been around for a long time. I have seen a lot of market ups and downs and ups and downs. So these traders are very skittish because they're conditioned to accept and expect market ups and downs. And I do think that we are in a different zone right now. The acceptance is really strong, and the amount of institutional money coming into the space is strong. Now, the macro conditions are what they are. They will determine what happens, of course. But I'm very, very bullish about, in general, where the space is going to be going. So don't pay attention to people who are very skittish, and don't create what we call pilot-induced oscillations by reacting to every single negativity. So those crazy like trading and so forth strategies are generally not the most sensible things. So that's one thing on my mind that I often tell people: just relax. It's going to be, where are we going to go from here? We have millions of users. We're going to go to billions of users. We're on an adoption curve that's increasing. And the things you can do with a blockchain are so much better than what you could do with the traditional finance system. They happen faster. They happen better. They happen more cheaply. And so they do carry some risk, as I mentioned. But they are so much better across all these dimensions that they're here to stay. And if you're running a big TradFi company, this is the platform you should be using. A blockchain, any blockchain, doesn't have to be Avalanche, although that obviously, in my opinion, is the most flexible, is the fastest platform anybody could use. So those are the thoughts on my mind. If we have a great summit planned at the end of March, in the third week or third and fourth weeks of straddling, I think 22nd of March in Barcelona. Come and join us. The tickets are on sale, and it's going to be a great lineup. We have 90 speakers already lined up. We will probably have more. More invites are going out to friends and people we like and respect. It's a great set of people. Come join us. It'll be a great time, and we will learn a lot. We will collectively discuss exciting topics, all the way from technical stuff related to consensus protocols down to regulatory discussions and so on. So it's just a whole spectrum of how to build exciting new systems for the new emerging world. So I'm really excited. Come join us.
Yeah, I'm looking forward to the summit myself.
Simon,
yeah. If the travel restrictions permit, like I'm still applying for my visa. If the whole process goes, I would love to join. But thank you, Emin, for joining us on the 100X show. Hopefully, in few months ahead, I get you back again for some of the updates, some of the interesting updates regarding subnets as well. Thank you again.
Thank you so much for having me. This was a great discussion. Thank you.